Earnings season is one of the most profitable seasons for stock market traders because it provides so much volatility and so many opportunities, and our repeatable setups work flawlessly during an earnings season. So far we are a neutral bias, but we would be cautious if the 512 breaks. So far initially was bullish, was pushing from 512, but then it double topped from the pre-market highs and could not really push. Sometimes you also look at the history of the stock. SoFi has done this even on previous earnings where it tries to push and then it gaps and grabs and fades all day. So as soon as I saw SoFi breaking this 512s, I told the traders that it's a 512 fade. 512 fade is our short setup. You buy puts or you short shares, definitely no long. And as SoFi started to push towards our first target 3450, rejecting 512s, I told traders it's still heavy, there is no long, still 512 short setup. And from there on, SoFi went on to fade from 1380s all the way to 1320s. So you short here at 14 bucks, you risk 25 cents and you make close to 80-90 cents, $1, and that's a good risk reward. One risk to 3 to 4 rewards, and that's how you short it and avoid going long when earning play fails to make a new high over the pre-market highs. Rejection top wicks, use 10-minute candles, make good decisions, make profits with earning setups. Pre-market planning on spot was pretty simple. No go under clouds, bearish buys, 553, 565, 572 were our key levels. When spot opened, we faded it from the morning from 555s to 443s, and then we longed it for a huge trade from the 512s MTFs to the upper 1 hour MTFs. When I saw these rejections, no long, 512 short, watch the pre-market lows, and that's our first target. So you short at 555s, your risk is like $5, and you hit your target of the pre-market lows at 543. We are trying to break the 543, but it immediately reclaimed the 543. So you cover half your position, and when it pushes towards 512, be ready to close your shorts. So we were still heavy, but when it flushed under that around 1010, it immediately reclaimed the pre-market low support. So it's a very important concept to learn. Remember that reclaim is a bullish pivot, and you need to understand that, and you need to try to think of getting out of your short. Once spot was starting to curl here and it pushed over this 512s, I sent out a price alert to my traders that is a 512 curl, close your short. And once we started to push over that, your initial stop is right here around 550. And when we started to push, you move the stops to 558 on those 512 curls. And then from there on, we started to break out of Ripster 3450. And that's when I told the traders to move the stops to 560. And my targets were 573 and 575. My ultimate target was 585. And we hit all those targets by end of the day. The final target was MTF target. That's when I told the traders exit everything into the MTF target. And we got our $40 per share profit on spot. The options went 400%. So that's how you trade the earning plays, short into the pre-market lows and curl the 512s back to the highs. 4 was one of a good earning play as well. MTF above, long over 512, cautious of the breaks. When I saw that it's swiping over the 512s, I told the traders MTF long versus 86. And from there on, 4 held those MTFs, gave you a midday 512 curl and pushed right into the $90 from $87. And finally, when it broke, we exited end of the day. That was a beautiful, another earning play long winner for us in the community. There was RCL, no go under 225, gap and crap. And RCL did exactly the same thing. 3450 breaks, gap and crap into the MTF. It was a very easy short setup. You could make up 100% on your puts. Similar setup was EAT. EAT was another MTF. MTF breakdown, you take that short, and EAT gave you over 12 to 13 points short.
Come to trade with Ripster. Join the community at www.tenettradegroup.com.